The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box. These are your headlines. Right, let's get straight into Nvidia. It drops in extended trade despite topping lofty earnings expectations. This is the AI chip maker's current quarter forecast. Well, apparently it underwhelmed some on the street. We'll discuss after. The disappointment seeming to, seeping into other chip makers. Qualcomm, AMD, Broadcom, all falling after hours, whilst Asian chip stocks also come under pressure. But the Nvidia CEO, Jensen Huang, still sounds a bullish note on the call.
The data center worldwide are in full steam to modernize the entire computing stack with accelerated computing and generative AI. Hopper demand remains strong and the anticipation for Blackwell is incredible.
CNBC learns OpenAI is in talks for a fresh round of funding that would value the artificial intelligence startup at more than $100 billion. And Berkshire Hathaway tops $1 trillion in market cap, with the Warren Buffett-led firm becoming the first U.S. stock outside of the tech sector to hit the milestone.
There's nothing better than watching a community of investment analysts and then journalists trying to understand something they don't understand. And it is wonderful to watch. You know this, ladies and gentlemen. The numbers at Nvidia were fantastic. They topped expectations. But for some reason, the market fell aggressively. So everybody's now running around trying to say, oh, well, it wasn't as good as X or wasn't as good as the top end. The fact of the matter is these Nvidia numbers are still intact. They were still knockout numbers. Now, is there a whisper number in the market? Of course there is. There's always a whisper number in the market. But what you've got to remember, everybody out there, is the numbers are very often just a catalyst to other events, i.e. people have positioning. They had positions on, so they were always going to do something with those positions after the numbers. Plus, we've had a journey. Look at where we've come on Nvidia. They have had the most meteoric rally so far this year. What was it? 160% coming into numbers. So if some people weren't going to take profits regardless, then it would be nonsensical to suggest. So you've got positioning, you've got whisper numbers, you've also got algorithms out there acting on these numbers as well. So there's a whole host of factors that the journalists and investment community just can't get their fingers on. The truth of the matter is, these were good numbers. Now, the shares are lower in extended trade after a top and bottom line beat in the second quarter. The midpoint of current quarter revenue guidance came in 2% above the analyst forecast, but apparently failed to meet some of the most ambitious buy-side expectations. Well, the chipmaker said it expects to ship, quote, several $billion in revenue from its new Blackwell chips. That was, of course, the concern, but that's going to be done in the fourth quarter, despite reports of production delays. So they kind of hit that metric as well. The CEO, Jensen Huang, looked to dismiss concerns that the upcoming new generation of chips would hit demand from its current Hopper products.
If you have a choice between building CPU infrastructure right now for business or Hopper infrastructure for business right now, that decision is relatively clear. And so I think people are just clamoring to transition the $1 trillion of established installed infrastructure to a modern infrastructure, and Hopper is state of the art.
We are going to spend a lot of time on Nvidia, and we make no apologies for doing so. That's why we've even got Arjun out of bed early from his Essex mansion. Good morning to you, sir.
Good morning,
How
Steve.
are you?
Very well.
Well, look, I've had my 5 Ps worth. I think very often it just is what it is because of how the market is placed, regardless of the actual numbers. But you tell us more about the actual numbers, and what do you think about the reception?
You know, I think I agree with everything you said there as well. There is also the whisper number. But there is also that whisper number. Look, people, the reality is the growth cannot continue at the rates we've seen over the past few quarters. That's just a reality. The comparisons quarter or year on year are getting harder. But still, look, 122% revenue growth year over year in the quarter. But it wasn't the 200% we've been seeing over the past few quarters. The guide as well was under triple digits growth as well. There's a bit of that. One other thing I'll add to the mix was one of the interesting things we saw when sort of this boom was taking off is that the sort of valuation in terms of a forward PE basis didn't really move much, even as this stock was on this meteoric rise, because Nvidia kept guiding up and guiding up.
And that's the other thing, they are growing into that valuation.
Absolutely. But now you are seeing that sort of forward P start to tick up a bit. So there are potentially some valuation concerns as well here on this. But look, quite frankly, this is a very volatile stock. It's a bit like Tesla as well at the moment.
Look,
there's a lot of retail investors in it.
But the forward PE for the next 12 months is only 36 times, isn't it?
Yeah.
Well, that's half what Tesla's trading at.
Yep, it is. Yeah.
It's not the most demanding forward PE I've ever seen.
Yeah, not at all. But it's sort of slowly starting to
Give us one more point and then we'll move on, because we've got a guest waiting in the wings as well.
Well, I'll just say this. I mean, the fundamentals remained strong. The demand picture was what was in question. Are the big tech companies still continuing to buy? And the answer is yes. Not only the current generation of Hopper chips, but certainly for Blackwell as well. And it looked like Nvidia dismissed those concerns that there was any kind of major production delay to them.
All right, super duper. Look, as I said, we've got a guest coming up. So let's just round the circle on this one as well. Asia chip plays. Let's have a look at where they are currently trading as well. Again, declines across the sector in Asia. Thanks for that, team. 2.9% down for Samsung Electronics. TSMC, the biggest fab on the planet, the key fab on the planet, 1.8% easier. And the US chips after hours, I mentioned Broadcom in the headlines as well. Let's have a look. They were down 3.9%. Right, okay, another view on this. Alex Morris, CEO at FM Investments. Alex, always a pleasure seeing you. We always learn something as well. You've heard from me, you've heard from Arjun. We need to hear from you, so what do you think?
You know, I think I agree with both of you, which is, I guess, good news, but bad news in the sense that it's just really hard to make out what the market really, at least the after hours market, which is admittedly not the full, brunt and thrust of a full day's trading, even though it'll be a slow week, given where we are in August, of what numbers were really spectacularly good. Look, making $1 billion in a quarter is pretty hard. Making $1 billion on top of the 19 they already expected of you is really just dramatically good. But it is interesting, to the point about the whisper number and positioning, we did end about where the options market sort of expected us to be. So you do wonder if some of the fix was already sort of in from a trading perspective, well in advance of what was a relatively humble victory lap that the CEO took this afternoon.
Yeah, I mean, so ultimately, Alex, and one could say then that Nvidia was a victim of its own success, right? I mean, if I was to take away the name of the stock and I said to you, there's a company that grew revenue 122% year over year, has risen 150% in share price year to date, trades at around 36 forward multiple there, still expects increased demand for its product, with a large part of capex of the biggest companies in the world still going to that company. Surely you'd still get into this company. You wouldn't have drawn down the 2% you saw pre-market or in the market and the 6% afterwards, surely?
No, absolutely not. And I think analysts in general agree. Almost no one has this at a sell. Few have this at a hold. Almost everyone has this at a buy or an outperform or a strong buy. And the numbers that they saw today are just not materially going to change that. It's unfortunate that we look at it and say, well, revenue growth year on year, looking on a quarterly basis, is half of what it was before, but it was 250% before. You couldn't keep that up even in a small cap stock that was, trading at just a few $1 million of revenue, much less one of the largest two companies in the world, where if they kept on that pace for a few years, they'd have more money than just about we have money to give them. And that would be, obviously impossible and a real problem.
Alex, was there anything sort of in the report that was concerning at all?
Obviously, there's a lot being read into, will the Blackwell chips be here? Will they not? And there just wasn't enough information to say yes or no. I think the hard part is there wasn't anything really great or bad about the report. The numbers were great, and the report and the conference call seemed to really just support that it's business as usual over here. We're just continuing to keep on crushing it. And the market seemed to say, well, that's just not good enough for us, which, if you can't win for winning's sake, then, you wonder, when do you just stop playing the game?
And just looking, I think, slightly more forward, there's been a lot made about the increased competition for Nvidia from the likes of AMD, who are sort of starting out their journey into this space as well. How big a challenge does Nvidia have from any kind of rivals at this point, or even over sort of the coming year or so?
It has some, but it has, say, 3/4 to 80% of the AI chip market, right? It's the market in that sense. It's in its own way, its own economic indicator, becoming as important as the GDP stats that we're going to get on tomorrow. So it has rivals, and those rivals will kick on, but it has such an installed benefit and base of where they are. It's going to take years, even if all of its competitors got together to try to put together a few interesting products that I think they have a moat for at least 2 or 3 years before they have to seriously consider the impact of that competitor base.
Would you be worried then, Alex, if perhaps some of the hyperscalers, which according to Jensen make up around 45% of Nvidia's revenue, were to slow their spending? Would that then become the key factor to worry about then for Nvidia's growth?
Yeah, and there's probably only 4 or 5 companies that matter in that sense, right? And those are the other largest companies of the Mag 7, who are a substantial percentage, of their capex goes to Nvidia, and they are a substantial percentage of the growth of Nvidia's revenue over the last 6-8 quarters. So if those companies were all of a sudden to scale down, they'd have to do so quickly, but it could happen. The problem would be they wouldn't put all of their bets into one other company. They'd start to spread themselves naturally. And that's where, as a trader, diversification would help as a market participant. But it seems unlikely for that to happen right now, if only from a herd mentality. One of those companies is afraid to move. Therefore, they're all going to stay where they are. So they all rise and fall together, which seems to be at Nvidia's favor in the moment and likely to continue to be so for at least the next year, if not 2.
Alex, let me do that disclosure thing before we go any further. You own this stock. Does your family own it? Does your company own it? Just give us your disclosures.
I own it through the fund that our company runs. The company does own it in a handful of our portfolios.
Perfect. Just done that. We have to get that bit over and done with. Okay. Now, look, in terms of the valuation, Arj and I had a little bit of a back and forth on this one as well. Am I wrong in saying it doesn't look that, on a pure PE basis, there's many ways to value a company, it doesn't look anywhere near as demanding as some other boom tech stocks out there, namely the likes of Tesla, for instance, but I don't think 30-odd times forward for 1 year forward PE looks that demanding.
No, it's relatively cheap, if we'd be allowed to use that term. And if we were to start to go back and look at some of the other bubble times, which inevitably we're going to hear a lot about today and tomorrow, it's still cheap by those standards, and it's cheap given how rapidly it's grown. I mean, this is a company split adjusted 4 years ago was trading at $10, right? If you were to have held this thing in your portfolio for the last decade, you're up measured in the thousands of percent total return, which you'd expect a company with those stats to be trading triple digit PE, maybe higher, starting to plumb that level. And it's just not. It has both the revenue and the earnings to back up its growth story, and it continues to do so.
Let me move beyond Nvidia, but talk about the inspiration from Nvidia, Alex, because I have a theory that I don't understand why everything goes up or down on the back of Nvidia. To my mind, Nvidia, and again, this is not a novel thought, but Nvidia is picks and shovels. Nvidia is making vast quantities of money out of the mania that is AI, ChatGPT, etc., etc. But the others out there who are moving up and down on the back of Nvidia have failed to prove that it's more than a cost at the moment in many cases. In fact, it's just a revenue line, a cost line rather than a revenue and a profit line as well. Why isn't there an inverse relationship with Nvidia rather than a relationship which feeds on the back of it and has a multiple a move for other stocks exacerbated by Nvidia rather than moving in the opposite direction?
I think there's a certain convenience to it, if not laziness. Easy to look at what Nvidia is doing and say the demand that it is seeing from all of those other companies is indicative of them producing future results. So if they have continued demand, they will produce future results. Therefore, let's just look at the demand indicator through Nvidia and eschew almost everything else because it's easy. And historically, it's kind of worked. And as long as it still kind of works and everyone puts such large percentage of their capex there, it is a pretty reasonable, bullish indicator of where those companies think they'll be. Now, the test will come, say, 2 or 3 quarters from now when those companies have to show results for the cash flow they've handed over to Nvidia. Historically, where they've spent their capex has been a good indicator of where they will be successful. So we're relying on that correlation standing up today. And there's no real evidence that that's going to change. So, that's that weird combination of convenience and history, and we just don't know. So why not just pick this thing so we'll all agree to it? And once there was enough capital behind it, it became powerful enough that you couldn't ignore it as that indicator.
I love your lazy line. I agree entirely. And I love the fact that you've written in your notes as well the word shibboleth as well. It should be in every read. Alex, here's the lazy question, but everyone's asking it, so I'm going to ask you as well. What is bigger for the market, Nvidia or actually the non-farm payrolls?
Right now, it's Nvidia. And that's something that's hard to say as someone who's followed rates and all of the other major statistics for a long time. But if you looked at what's going to move markets and more actual market share, for the next few hours, it's Nvidia. Longer term, obviously, non-farm payrolls, GDP, the other things we're going to see are going to be much bigger. You almost wonder, were more people tuning in to watch Nvidia? And I think the answer is yes, than Jay Powell from Jackson Hole. And that's just something that's anathema to most of us. But, we are following the markets. We have to follow where the dollars are going so we can help folks figure out where they need to be. And right now, that's what Nvidia is up to.
Good man, Mr. Morris. Thank you very much for your time. Much appreciated you being up in Washington. It's time for us as well. Love the conversation. Alex Morris, the CEO of FM Investments. And I should thank you as well for leading us off in that conversation.
That's a very interesting point about
who's
more watched. Have you heard people organising viewing parties to watch Jensen Huang and on his earnings call and things like this?
Really?
I've read this today.
So the only people, I'd imagine that that this has happened at with Buffett. I'd imagine when he speaks.
Yeah.
SoftBank. I'd imagine.
SoftBank, yeah, probably.
I can't imagine anyone else would have that influence.
No.
I mean, who else would it? Buffett, SoftBank.
Maybe
not Gates in his prime.
Maybe Steve Jobs back in the day, potentially.
Yeah. Well, we've got the set.
Did Meta not matter as much as well, just a little bit early on? Listen, once he listed in 2012, I think it mattered after the market.
People having Zuckerberg parties. Are you serious?
I certainly didn't. Never know.
I watched the movie, enjoyed that. I don't think he did though. I'll catch you later. Let's stay in the sector actually. OpenAI, how about this one? OpenAI is in talks over a funding round that would value the AI startup, wait for it, drum roll, at over $100 billion. CNBC has learned. Now, one source with knowledge of the matter told CNBC the round would be led by VC firm Thrive Capital, which would invest $1 billion. The Wall Street Journal has reported that Microsoft, which is OpenAI's biggest backer, will also participate in the round. OpenAI and Microsoft declined to comment. Do you want a word on this one, or not really?
Interesting. It's one of the. It's one of the.
That was one word.
There you go.
It wasn't quite shibboleth, was it, or anathema that we had from Alex? But interesting.
Well, look, OpenAI needs a lot of money, right, to continue buying these Nvidia processors as well, and investing in its product, and also in terms of monetizing AI, this is where Microsoft really sees its ability to do so through some of these OpenAI products, through its products, and charging customers for it. And it's saying already in its earnings that it's seeing some return from AI in its cloud business. But where a lot of these so-called hyperscalers, these Microsofts, Amazons, and Googles in the world are going to see the return is likely in their cloud business before anything else.
Got it. Well, there you go. That was better than interesting, wasn't it? Nice, we just needed to give you a few more words.
That comment was interesting.
You said one.
Not an anathema. You can check out all the details on CNBC.com. What else is coming up on the show, Arabile?
Well, we're going to have more of that reaction to Nvidia. Why don't we? Those results then, of course, sweeping through financial markets. Will continue to unpack the impact of what the AI bellwether is telling us about the sector. Plus, authorities in France formally charged Telegram founder Pavel Durov. That's for allowing, quote, criminal activity. We'll discuss what his detention means for content moderation across the bloc. And risks of a nuclear accident in Russia rises. That's according to the IAEA. We'll talk through the threats with the organization's Director General. That's coming up a little bit later on, 9:30 CET.
CNBC Connect is back in Bangkok, Thailand. Join the world's top entrepreneurs and C-suite executives for an invite-only leadership retreat. On the agenda, powering innovation and growth in Asia. Is AI transforming industries and creating opportunities? And get insights on building sustainable and resilient businesses. Be part of Managing Asia Live. Network and join an interactive brainstorm session. CNBC Connect, powering innovation and growth in Asia on September 4. Register now.
Sometimes these things are very well done. Other times it's just like Steve picks up Pernod Ricard. Okay, there you go. I am picking up with Pernod Ricard. Full year net sales over at Pernod. I knew exactly what was going on. Always do. 11.6 billion euros. Organic decline though. And this continues that luxury stroke premium alcohol trend that we've seen over at Diageo and elsewhere. An organic decline of 1 to 2%. Look at the shares. So my question for you viewers is this new news or actually is it already in the price because of what we've already heard from Diageo and other luxury players such as Louis Vuitton Moët Hennessy, of course, the Moët Hennessy bit on the premium alcohol end of the spectrum. So a decline of 1 to 2%, according to the compared with the company consensus. Full year profit from recurring operations, 3.12 billion euros. Organic growth there of 1.5% versus 0.1%. I should say that the organic decline in sales revenue was virtually in line, mildly by a decimal better than expectations as well. What else are they saying? The divvy proposed for 4.7 euros per share. 2025, they expect organic net sales back to growth with continued volume recovery and to sustain organic operating margins. So you can sell anything you want at the wrong price, but you've got to sustain your margins if you want profitable growth as well. And that's what they're talking about there. Now this is really interesting. Continued very weak macro context in China. Now, we've seen a whole host of numbers, whether it's from the iron ore players, or whether it's on consumer-facing companies such as Pinduoduo we talked about earlier this week as well, which is saying continued macro weakness in China, but the good performance the rest of the world. So it's still that blot on the horizon. And why is China important? Well, very obvious for many reasons, but it was the X factor to the upside for many of these companies for decades, certainly for the first 20 years of this century as well. So continued very weak macro context in China. Obviously, we have to dig into the weeds to see if there's any forming of a base there, but they expect for the full year 2025, soft first quarter. So it's a bit of a jam tomorrow story or a Pernod Ricard tomorrow story with further inventory adjustments in the US. So that's not good either. Further inventory adjustments in the US. And as I say, the shares have had a drubbing, mostly in the last 12 months as well. But look at this compared to the rivals. Brilliant chart to show, team, as well. They have mirrored the rivals to the downside. We've already had the bad news from Diageo and others as well. So my question is, when we get to the open today in an hour and 35 minutes, is this new news or is it a continuation of the trend which has already led to these declines? Again, hard to work out in advance as well because there's a lot of positioning out there on this one. You got any words of wisdom?
Yeah, so it's again, you started off with this, and it's that premiumization conversation that we kept on having, right? And I know I point a lot more to Diageo just because we speak to the CEO of that one as well quite a lot. And really the conversations have always been about buying brands, if you haven't made them yourself, organically, is about buying the kind of brands that will lead to the growth of premiumization. But that hasn't worked out the way that these drinks makers would have actually liked. And so now it's about, or it looks like, it's about trying to go back to basics, to try and find where exactly can you meet the consumer. You can't meet the consumer where you thought they were, which is that premiumization step, where they would then buy that premium brand, but perhaps not as many of them as they wanted to. Now perhaps buying less and fewer, and maybe not necessarily the premium brand, as it were. I think the conversations are very interesting as to whether we'll get that in future from them.
That's a very good point, actually. They've put a lot of money into that, and they either double down or they're trying to look for other strategies. 100%. I would guess they're going to double down at this stage.
Yeah, will be interesting to see. Well, let's focus in on what would be an early birthday present then for Warren Buffett, because Berkshire Hathaway's market cap crossed the $1 trillion mark for the first time yesterday. Now, the first US non-technology company to do so. This even after Berkshire Hathaway announced that it had offloaded tens of billions of dollars worth of stock so far this year. That's primarily in its two biggest holdings, that's Apple as well as Bank of America. Now, its cash pile now sits at a record $277 billion. Now, since Buffett took charge of Berkshire in 1965, its shares have risen by 5,600,000%. That averages out to around 20% annually. Buffett turns 94 tomorrow.
Wow. Good for him. Meanwhile, CrowdStrike is moving lower after its first earnings report since it reported that huge IT outage that impacted workers around the world in July. Now, second quarter earnings beat by 7 cents after excluding the 2-cent hit from the outage. The company, though, did cut its revenue and earnings forecast for the year, with subscription revenues expected to see a $60 million hit for the duration of the year as it tries to deliver incentives to customers.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.